Hello guys, hope everything is okay with you guys. Hello Orange. Sorry guys, I have some problems with the internet. I'm trying to fix it, so it looks like weak, but I think I have the video right now and I see Orange. So Orange, did you check B1D? I hope you traded these days, man. Yes, did you trade it? I got some thousands of dollars this 2 days. Oh no, you will miss a lot if you don't trade it. It means if you know how to go long and go short. I understand. See, you should expect from for every 100 shares, you could expect from $500 to $2,000 each day. So today I got some thousands of dollars, but I bought it yesterday. At the end of the day, I see that it goes up from the other day. So, and in the morning it goes so good. So when I get the top, like when it goes until I think 144 43. I think I sold it 143 or 45 or something like that. Yes, I know it is too scared, but the thing is, this is the good stock. Oh no, for me I go long. So in the morning it goes so good in the morning, so I sold it before it goes down. I sold it, and then it goes down, then it goes up again, then it goes down, then you know, it's a very volatile day. So whatever you do, you can make money. You say yes. Did you see the IPO SHWY? No. I don't. You know. I have some IPOs to follow, like Uber, like Lyft, like the other IPOs, but I don't search each day for stocks. I don't. But you said BYND got downgraded when? Hello Curtis, how are you? No, you say recently, yes, but is it when you say recently, when? Hello Curtis, I will answer your question, so just hold for a few minutes until I finish with Orange. Hello Nazila Nochi, bonjour, bonsoir, comment allez-vous? Oh yeah. You told me about the $37 the day when it dropped. Yes. For me, I was with a gap up. The second day, it has another gap up, but the third day go down. So for me, I traded on Thursday. I bought it at the end of the day, and I sold it in the morning. So I will, before we go to Curtis, he has some questions. So I will, yes, I bought it after the drop. Okay, because when I see it go down, I don't see downgrade or I don't see the news. Okay, but on Thursday, when it goes, it was, it doesn't go down or up. So I understand that there is like a big push. So I waited for in the morning, and I will let you know. I will tell you. I will tell you. I will tell you when I sold it. Yes, I bought it on Thursday at the end of the day. I will show you just a minute. Let me go and show you. So let's see the chart. So what you are talking about is Tuesday. Now for me, as you might know, for me, I bought it way long, and I put it in my portfolio before, in my trading portfolio. I bought it before, okay? So we follow the trend, until the gap up. So in the gap up, I sold what is in portfolio and I sold mine. But the next day, which is Monday, it goes up from 138 to 186. So this I miss. I didn't stay here because I was scared also that from 99 it goes to 149. I don't want that to lose this $29 for each share. It's too much to lose, because I can have this here also here. So I sold it. The next day it was so good, but I didn't trade it. I didn't see it. Okay, I didn't see it. If I see it in the morning, I could day trade it, and it was so good. Now this, what you are talking about, which is Tuesday, you say downgrade. Yes, it could be this one. Now, for me, I didn't buy it on Wednesday. I bought it on Thursday, just when it was green. It's like I bought it like 142, 143. So it goes in the morning to 157. Okay. So for me, I get $12 for each share. This is what I got today. Okay, I got $12, and this is what we are talking about. Now let's see the stock that you talk about. CHWY. Chewy? Is it chewing gum? Oh no, I didn't. So from 36 it goes to 32, 41, then 34. Yes, it's good, but it doesn't move that much. It didn't move that much. $9 the whole day. $9. It's good, but I didn't see it. You know, each day we have a lot of stocks. I didn't see it. Okay. Now let's go to the question of Curtis. Now Curtis said, hello, my question is about X dividend, the day it pays. How does it work? Now the X dividend, it's not the day where you got paid. No. It is the day, if you buy it, you don't get the dividend. This is what we call X day. For example, a stock today, it is the X day, let's say Friday. If you buy it today, you are not going to get the dividend. You should buy it before the X day. Okay, that is for, and understand. I have, listen Curtis, I have made a lot of videos about this X day and about dividend stock. If you are interested to know the dividend, I have a training called How to Calculate Your Dividend Stocks. So a dividend, in simple thing, what is it? It is a percentage, like 1%, 2% each quarter, okay, taken from the stock itself. It means it's not something that they give you from the company earnings. It is from the stock itself. So I will give you an example, because I think you have the old ideas, what is going on in the internet. You have no idea what is really a dividend. Okay? So before I go to the other questions, I will just try to explain to you this. So please, Curtis, try to focus. I will explain for you. Okay? Now look at this. So now this is what we call the X day. Let's say the X day is today, which is Friday. Okay? Today is Friday. So the X day, what does it mean? It means no dividend. If you buy it here, no dividend. If you buy on Friday, you have no dividend that you get. Now why? Because Thursday, let's say the stock is $100, and at 4 p.m. they give the dividend. So let's say it is 5%. Let's say it is 5% dividend, okay? Because it is by percentage. Let's say this stock gives 5%. Normally it gives 1%, 2%, 3%, whatever. What happened to the stock after 4 p.m.? Now the stock closed at 100. Now 5%, it means we take $5. $5 minus $5 equals 95. So in the morning you find the stock at $95. Now after a few days, you will see in your broker account, let's say you bought 100 shares. Okay, just an example. Okay, 100 shares, and your dividend is 5%. Here is 5%. So this 5%, it is $500. Now this $500, you will find it in your broker as dividend. And it is a cash payment. It's cash. It means you find it as cash. It means money, cash money. Now, the problem that you don't know is that you have $95, so the stock has dropped down. What does it mean? It means $500 it is taken from 100. So typically the $500 is yours from 100. They just took it from the stock. So in terms of money, on Thursday, let's say you have only this money, okay? Let's give you the math to understand this, because if you don't understand this, you will never understand dividend. And stop listening to other people thinking that the company send you money. No, the company will not send you money. It will cut just from the price. For example, $100 for 100 shares. How much is your capital? Let's say your capital is $10,000. This is 100 shares, okay? Now, on Friday, what you get in the stock? You get $9,500. This is your money. Plus, later, the company will send you $500. So, when they send you $500, it will become $10,000. So, did you make any money? No, you did not make any money. Okay? You did not make any money. It is your own money from the stock. Because they cut the dividend from the stock itself. If it is from the company, they will not cut 5% from the stock. They will send you $500 without touching the money. So here, on Friday, the next day, you will find $100. But you don't find $100, you find $95. Okay? So understand that. And this is the answer for your question. Please, Curtis, send me an email if you need more explanation or you need more training. I will show you the training that you should go. If you are interested in investing in dividend stocks, it's a training level 16. This will give you a lot of information about dividend, about companies, and how it works. Okay? Now, let's go to see the second question from Curtis. Can I buy and hold for 1 or 2 days? Yes, man. This is what I teach. This is called swing trading or short-term trading. You can hold the stock for days, weeks, and even months. This is called swing trading, and this is what I teach. Because when you buy in the day and you sell in the day, it means in the same day. This is called day trading. Now, if you hold for tonight, whatever days, whatever weeks, whatever months, this is called short-term trading or swing trading. And this is what I teach in my channel. Okay? So, hope, Curtis, you understand. Now, you can, Curtis, you can go to my website and get the first training for free. You find there. Okay? It's better for you. At least you will understand what is swing trading, because it seems to me that you don't know what is it. So please take training level 1. It's for free, no money. You don't pay nothing. 28 videos. You watch them. They are in my website. You go to them. You enter. Make an account. You watch them. And then you send me an email later. Okay? Now, let's continue with the other questions. Oracle will be said. That's why BYND dropped on the chart. Yes, I see that drop, but I didn't trade it that day and the other day. I didn't trade. Okay. Let's see here. Yes, no, listen. It's not, I didn't buy because of the support line, because support line it is not in that day. Support line is before and before, but I will not buy a stock like this going down 36 points or 40 points a day. I just go and buy it blindly. No, this is very dangerous because it's too volatile. It's too volatile. So for me, after the drop, the stock comes back, and then the other day was strong, but it didn't go up or down. So I feel that there is a potential that the stock will go up. That's why I bought it. Okay? Now in the morning, I see the potential. Whenever I see 15 points up, I sold it at 12 points. It means $12, but it goes, I think, to $15. $15 up from where I bought it. But I was waiting that the stock continued to go up, but it didn't. It was going down, so I see myself, if I stay more, I will lose all my profits. So I sold. Thank you, Curtis, for your question. Oral Prenobis, you said pet food. Now listen, I don't know that it is for human or for ghosts or for alien food. I don't know. I don't trade the company. You know, you make me laugh on purpose when you say pet food. I don't care if it is pet food. Just when I want to see the price in the afternoon, I was outside and I took my cell phone and I put buy one the stock, and I see that it is like pet food, like cats and the other animals. So before, I don't know. So that's why it is funny that most of the time I don't see the company what does it do. I see meat. Yes, I understand that it's company making meat, but I don't know if it's human, for animals, for fish, for alien. It doesn't matter for me. The most important thing is that I make money. That's the good thing. Pablo, EMPH. This stock is doing so well these days. Yes, I know. Pablo, you are following good stocks, man. Let's see, PNH. Aha! Man. This stock, we bought it long time ago in our subscription. ENPH. It follows the market since 26 December. But we bought it later because at that time I didn't have the. So it's doing good. This stock, yes, it's doing good. Yes. Thank you, Pablo. Okay, Pablo, if you have a special question, please send me an email. I love Djellala. Hi. I didn't see you a long time ago. Okay, let's continue. Oral probably said, I lost money shorting HSY recently. I want to short it against if it gets near 139. HSY. I think it's going on. Let's see. Oh. Listen. Listen. You are shorting this stock. Or perhaps there are a lot of stocks that we speak about and that are in my portfolio. So this stock is going good. Since you are doing day trading, you can choose any stock, it doesn't matter. But it's better to choose stocks that are already going down and making new lows. This is my strategy. Okay? But you are trying to get some bucks from this from corrections. Yes, you can do that. But for me, I don't like strong stocks. I don't short them. I short the weak one. I love Djellala. Ask the question, what's the difference between pullback and retracement? Now listen, there are a lot of words that are the same. But some people, they say pullback. Some people, they say retracement. Some people said reverse. It is just when the stock changes the direction. Okay? So all these words are the same. You can even Google them, you find that they are the same. There is no difference. I love Djellala said, what's the level in Fibonacci that most of stocks retrace? Please, I love Djellala. Please, I don't use indicators, so don't ask me about indicators that I don't use. I don't use indicators. So when you say that most of stocks retrace, what does it mean? Do you think that the stocks do the reverse the same percentage? This is stupid. If it is like this, everything will be a piece of cake for anyone. So we just wait until we have this percentage and we buy and we make money and we have a sure thing and it's okay. As if someone knows the future, as if this Fibonacci or Fibonacci, I don't know this thing, knows what the people are thinking. Understand that if it is something in the whole market, yes, but it has no percentage. It comes just in one day. Now, if I show you this retracement, I showed you 6 months ago, and each week I showed the people. I showed the people 6 months ago. This retracement, the big retracement in the stock market, is in the 26th December 2018. So, I love Djellala. I will show it to you last time. Try to remember it. Don't think that there is a rule. There is no rule. But if the whole market do retracement, it should be only one day. So I will show you the last retracement in the stock market or the last reverse. Okay? So just keep an eye on. Okay. Let's see. Yes. For the Hershey, this is the day for retracement, but the stock was going up, and then it goes down again, then it goes up. So it doesn't do good. But the Dow Jones shows you very clearly. Okay? See with me, man. I have done this always. I always showed you the retracement. Now, the stock market was going down at the end of December 2008. This is the day, 26 December. Okay, this is the day. You see that? This is the day, which is the day of the retracement, or the day of the pullback, or the day of the reverse. You see that the stock market has reversed from this day. It reversed. See? If you put this here, put this here. So you see that? Oh, we can check it like this to see it well. So you see this V. This is where it reversed. So there is no percentage you can see. A percentage of what? From where? And then it goes here and it does another reverse. There is another reverse here, as I showed many times ago. And I say if it continues, it crosses the trend, the big trend will continue like this. Okay? So this is what we call the retracement. So hope you understand. I love Djellala. Since you are following me for a long time, you understand that I don't use indicators. Maybe you think that in my training I use indicators. I don't use them. I don't use them. I have my own techniques to know the trend. I am a specialist in trends. I don't use what the people use. I don't care what they use for me. I use what it is good for me. Okay? So, no Fibonacci, no MACD, no moving average, nothing. I don't use them. Now, let's continue with the questions. Another good question of Oran Peribis said, do you always use a hard stop or a mental stop? Most of the time, I use a stop loss. It means physical stop loss. But a stock that it is strong, that it is too volatile, I can't use the stop loss. Because if you use, like this stock, which is called BYND, or Meat Beyond, the stock moves $20 a day. How can you put, where do you put stop loss? Okay? So you can't put stop loss. You can't. So it's better to use a mental stop loss. You follow the stock and you exit, and you don't stay with this stock long time because it is too volatile. Okay? And it can make a lot of money and you can lose a lot of money. So you risk a lot. So either you do it good or you lose it, or you lose a big loss. So you should know how to deal with the stocks. Now, if you feel it's dangerous, and I'm telling you, BYND or Beyond Meat is a very dangerous stock. If you don't know how to sell short or how to go long and to keep an eye on it, it's better not to trade it. It's too volatile. For me today, I bought it Thursday at the end of the day. In the morning, it goes $15 in the morning. By 11, 12, I see it's that good. So when it begins to go down, I sell it at $12. $12 profit for each share I bought. And I make some thousands of dollars today, which is very good for me. Okay? CHWI is a pet food. You look at the chart. Chewy. I told you. Now when you say chewy, I thought it's like chewing gum. I say it's chewing gum, it's not meat, but it's okay. It's okay. I am not going to buy this chewy thing products. I just trade the stock. I don't care about the company what it does. Okay. Hello Duna, how are you? It's a long time I haven't seen you. You said I took small position in Chewy. Oh, you have you? It means you are doing day trading, Duna? It's very volatile in the day, and there is no stop loss. I understand Duna and the other guys who are going to trade an IPO in the first day. There is no stop loss. You should use always the limit if you want to exit, and it's hard. So be careful on the first day. If you are not good in doing quick solutions in order to exit, it could be a very bad thing. Usually, if I want to trade, I trade on the first after 9:30. When I see the price, I just see where it goes. If it's going down, I will leave it. If it begins to go down, to go up, I will buy. But in the few minutes, you should buy. You leave for whatever you leave if the stock is going up, and then when you see money, you sell. You don't wait until it comes back, because it is too volatile and the people play a lot with these stocks. How much is your subscription service is available at Djellala.net? Now, on Opportunities, I have two. I have silver and golden. Okay? You go to my website and you check. We have silver, which is about search, and we have golden. Okay? Oh, yeah, Opportunity said it's a trend is up. HSY. I am trying to find the top, which is dangerous. I agree. I am counter trend trading. Yes, it's good, but what you are looking for? Are you looking for correction in the stock? Yes, but why you don't go to stocks that are falling? In the day trading, you can find opportunities. Okay, a lot of opportunities to make money when the stocks are collapsing. You will find 100 each day collapsing. Because of earnings, because they are not making money, because the mutual funds are selling, you will find a lot. I love Djellala said, this is the system of following trends. Now, what is this system? And who creates this system? In trading, there is no one strategy. There are millions of strategies. You can make a strategy. If it works for you and you make money, that's it. So there is no monopoly on the trading or investing, or there is no monopoly. It means do whatever you want to do. If you are successful, that's it, the good strategy for yourself. Don't follow other people or follow other indicators, because an indicator by term, it is lagging. It means it gives you information that I can get ahead of this Fibonacci or any other indicator. I can give you the best day to buy precisely, okay? Precisely the exact day to buy in swing trading, okay? All the other indicators will give you a late. And if they are not the same, they will never give you something solid. Honorable said, I don't like to use a physical stop loss because some say they can take out your advertised stops. No. Listen. Honorable, because of my extensive experience, what you should avoid is illiquid stocks. Stocks with low volume. The brokers take the thing and they can run them. Because the bid and the ask is so wide, sometimes this stocks doesn't trade that much. So the market maker makes the bid and the ask wider and wider and wider. So if you put stop loss $1, $1.50, you will exit. But you don't exit with that price. You exit a price that it is up. You are not going to lose a lot of money, but you exit the trade and it is a profitable trade. So avoid illiquid stocks. Try to buy stocks that are liquid. It means there is only 1 cent between the bid and the ask. This is liquid. You find 1 million, 2 million, 5 million, 10 million, whatever millions. Even you find 100,000 or 500,000, you should always see the stock, how it moves. Okay? If it is always liquid, this stock, if you put stop loss, it will be exact. The broker cannot take you out of the trade if the stock is liquid. Okay? But if you are doing day trading, you can do a mental stop loss because you watch. But you should have an idea where the stock will be going. If it goes to that price, you sell. And you should be firm with that. Because playing with stocks and you don't know where to exit and you just see, this is a real problem for a trader. Because you don't have time to think. For example, a stock is $20. It goes to 19. You didn't put a physical stop loss. It means no stop loss is put. But at 19, if you see 19 and you don't exit and you let it go to 18.50, 18, it's over for you. You will be the big loser of the market for 2019. So, you should be firm. You should be firm. You should have strategy. Before you buy the stock, you know where to exit if it is bad. You should know this, because if you don't know this, why you are trading? So you don't know nothing. Yes, the stock can go up, can go down, yes. But you should think about yourself, about your risk. Don't think about the stock, about other people, what they do. Think about your money. Don't calculate other people's money. Think always about your money and take care of it. Okay? Honorable said, what is your average hold time when you swing trade? Now, listen, I will tell you my rule. Okay? Honorable, I will tell you my rule. My rule, I don't have any average. And I don't see the past average. And I am not looking for the future average. I don't look by average. What I look for is I buy a stock. If it is solid, it is strong, it's going, I will stay 5 months, 6 months, 8 months, 1 year. I will. But if a stock goes few days and it goes against me, I will sell it. So there is no an average. Each stock is unique. Now look at this stock buy when ND. I bought it weeks ago, 2 weeks or 3 weeks or 4 weeks ago. Just from the beginning, I checked this stock. It was so volatile that I like it. So I put it in my portfolio and I bought it myself. I was looking for this stock going up $10, $10, $10, then going down $20 down, then going up $5, $10, $15. I see this stock is so strong, so I keep it. But when I see my money, I got some money, I got a gut up. Whenever I have a gap up, I sell. If it is big, I sell. And understand that the gap up that I got last time with my guys was $35. Just the gap up. I'm not speaking about what we got before. I don't know how many dollars I got. It's from the beginning of the trade. So you see that for me, each stock is unique because there is a saying. There is a saying that says, it's a Chinese saying. What do they say? I will put this. At least you will see it. They say you cannot swim in the river twice. So the saying said you cannot swim in the river twice. So what does it mean? What does it mean? It means the water is running. Okay? So the water is running. So the water that you swim in once is gone. So the second time, the water is new water. You see that? So I can explain to you this by this Chinese saying that here when we speak about water, we speak about time. It means to give you an example of this, let's say this. Okay. 26 December, I always speak about this date because it is so important, is the reversal. The stock market was going down. This is the day where there is a reverse. There is a reverse. And then the stock market was going up and it goes down a little bit in May and now it's going up again. So all this time, if you have not bought good stocks in this time you will never see, because now we are in May. You didn't buy in December or January or February or March or April. All these months you didn't buy good stocks. So now you are in May. You can't bring December to now and you say this is December. No, this is May or June. We are speaking about December. So each stock has a time. And if the time goes by, it should be another time, another opportunity, but it's not the same. That's why when you swim, you go swimming in water. This water goes and there is another water coming. So the first water is gone, the second water is coming. So you are going to swim in the second water because the first has gone. This is like time. Okay? This is like time. So in practice, each stock is unique. Each stock is unique. Now, I will tell you an example. Two stocks, one stock is like this. Okay, here it begins with $10. It goes to $20. Now you find the same stock, it goes from $10 to $20, but it's like this. So you see that? Now this stock has the same performance of this stock. It means from $10, you double your money until here. There is another stock begins with 10, but you see the days are straight. There is no going up, going up, going down, going up, going down. And you find another stock which is $10. It goes to $20, but it's like this. Okay? All these three have the same performance. It means you make 100% of your money. It means you double your money. But the trends are different. So for me, I don't look at the patterns. I look from 10 to go to 20. This is what I look for. I look for the goal. I'm not looking for the patterns. If you look at the patterns, you will never make any trade. You will be disillusioned, as they say. Okay, so let's continue. Let's continue to see the questions. Please understand. Okay. Now, European said you better to short downtrends, making lower highs and lower lows. Yes, if you are going to do selling short, okay, it's like going long. It's the same thing. Stocks are going down. If you sell short and it can go down, you make money. So it's the same as going long. There is no difference in terms of making the money. The only difference is that you should pay interest rate if you take the money of the broker. That's the difference. I love Djellala said, I traded the FVRR in the first days. E-Trade accepting market order in the first day of IPO. I have no idea if they changed the rule. I don't. E-Trade has nothing to do with the first day. It's the exchange, the market makers who put the rule. It's not the E-Trade. E-Trade, they send, but if they accept, it means that the market makers accept. But I will next week I will ask them about this question, because I have never seen this, because I don't trade IPOs in the first day. Okay? For me, I wait until I see the chart and I buy accordingly. Okay? But since you tell me this, I will check them. So Curtis said, why do people hold the stock for years for dividend if it comes from the price and you don't really gain money? Oh, it's a good question. it is a good question. So why do people hold a stock for years? For dividend, if it comes from the price and you don't really gain money. Okay. I will explain to you this, so I hope you get a clear idea when I explain it. Okay? Ask yourself, the people who stay years are investors. Investors, when they buy a stock, they don't want to sell. That's why they like dividend, because they are not interested too much about the stock appreciation. I'm trying just to get the idea to your mind, but I will give you an explanation, okay, with the chart, with the thing. Look at this, Curtis, please. Okay. I will give you an example to show exactly an answer to your question. Let's say someone has $1 million. I will give you this example. Okay? I will give you this example, and you will ask no one after me. Let's say you have 1 million, and all your stocks, whatever your stocks, for example, you have 50 stocks, 100 stocks, whatever stocks you have, you are getting 5% each year. Now, let's say, understand that the stocks, some they go up, some they go down. So you get 5% for example, a stock that it was 10, it goes to 15, and when it is 15, it goes to 10. Let's say you take a dividend from here and you take a dividend from here. Now, are the dividend from a stock that it is 15 is the same as $10? No, they are not. 5% here from a stock that it is $15, it is not the same as 5% here. So the investor is not looking for stocks that are going up or down. He knows that some stocks are going up, some stocks are going down. He is interested to get a 5% of this $1 million through the years. Let's say here we have 1 million. 1 million. Okay? So if you take 5%, this 100 million becomes $950,000. But this $950,000, it can go to 1 million next year. So you see that? So here is what we have, what we call price appreciation. Price appreciation. It means the stock is going up. And if the stock is going up, you will get the same money. So the conclusion is that the investors are not looking for price appreciation. They are looking for the dividend. Let's say 5%, they get $50K or $50,000 a year. Sometimes this $50 goes up because 1 million is going to 1,200,000 next year. So their principal goes up. So instead of getting 50,000, they can get 70,000 next year. You see that? So the percentage is static, but the principle is not static. This changes. Now, what is the conclusion about investors? Investors, they get this 50,000 and they do not sell. This is the most important thing. They don't sell their shares. This is the most important thing. That's why they can get 50,000 and 70,000 and 100,000 through the years. Because they don't sell their shares. Their shares are going down and then they go up. Or with the price appreciation. Okay? So this is why investors, they like dividend stocks. Like Warren Buffett. And like all the investors in the world. They like dividend. Because their shares are the same. Their stocks are the same. What is changing is the price. The dividend, yes. The percentage, yes. It can change also. The company can change the percentage as they like. So the main thing I'm telling you is that they don't sell shares. This is why it is good to invest in dividend if you have money. If you don't have money, you should make your account bigger and bigger and bigger, because the small accounts doesn't make any money. Okay? So hope I explained too much for this information. And Curtis, if you have more questions, you can send me an email. istockmoney@yahoo.com. You can send me an email and I will explain more and more. Because all these things of the dividend, I have seen a lot of people trying to make a business for dividend and they collapse. Because people, they don't understand. They think that dividend is a company that's sending money from their real money. No. The real money of the company you will never see. You get the money from the price of the stock, not of the real money that they get. Okay? So if you go to training level 16, how to invest in dividend stocks, you will see I will try just to find, if I can find the thing. So this is the, if you click on that, you will find the training. Now let's continue, because I have a lot of questions. Now Curtis said the stocks FVRR or Chewy, seems like you guys follow the hype on the TV. Best to wait for first earning release. Better investing before investing. First day appears insider. Make the money at initial. No, Curtis. Curtis, you are new here. You don't really understand, because I think you don't know what is day trading? I think you don't know. The people here, when they talk about the first day, they are talking about day trading. They are not talking about swing trading, and they are not talking about investing. Each one is so different from the other. So, Curtis, you need to follow all my trainings to understand everything, because I have made a lot of videos. You can search my videos about what is day trading, what is swing trading, what is investing, to understand what's the difference. Because for me, I see that you don't understand. You don't understand the difference. Okay? So take my suggestion and listen. Okay? The earnings, people, they don't only see earnings in a company to invest. This is for the long term. And most of the people, they don't buy a company that it is just an IPO in the market. They don't buy it for investment. They do trade. A trade, it means it should be day trading. It means you buy and you sell in the same day. Or swing trading, you hold for days or weeks or months, but you are not investing in it. Investing, it's another thing. You should know the company itself. You know competition, you know earnings, you know debt, you know cash flow. You know a lot of things in order to invest in a company. So please, Curtis, you are new here. So you should learn. If you stay here at the channel and you watch a lot of videos, you will understand a lot of things that shows you everything that you need to know. Okay? Now, Orapuribis said, do you ever use a trailing stop? No, I don't use mechanic stops, because mechanic stops, it goes by a precise price that it is going to be duplicated. For me, I don't trade like that. I have my own techniques. If you do that, you will always exit a trade. Always, I'm telling you 100%. If you buy a stock, you put these trailing stops, you will exit every time you buy a stock. That's why I have never used them. Never in my life. Okay? Never. Because I understand what they do. I understand clearly what is a trailing stop. That's why I don't use it. I love Djellala said, Curtis, FVRR was so good at first day. Most of the IPOs make big move at the first. They have to be cheap and use some observation of price and you make money. Curtis said, generally I avoid IPOs. Beyond Meat was the exception. People thinking Chewy or Favor will be like that. Like, no. Here, listen, Curtis, here people, they don't think about the future. They are doing day trading. Day trading is you buy and you sell the same day. It has nothing to do with buying and holding the stock tonight. No. You are mistaken. Curtis, people are not, when they speak here about the first day, they speak about day trading. They are not speaking about swing trading. So that's why you should know the difference. You are thinking about swing trading, but the people are speaking about day trading. So you should differentiate between the two in order to ask a question or to speak. You should understand the difference. I just explained to you. Day trading, it means you buy and you sell in the same day. You are not going to see the company name or to see the fundamentals of this company or to say who is this company. No, you follow the price. Okay? Honorable said, Bruce Lee started to be like water. Water can flow, water can crush. Be water, my friend. I should trade the trend or current. Yes. You know, Bruce Lee, I love Bruce Lee. And I had read his books when I was like 17 or 18. It means in the 80s or the 90s. No, in the 80s. In the 80s, it means 35 years ago. I have read his books, philosophical books, and Jeet Kune Do books. So, Bruce Lee believes there is no style. It means there is no a given strategy that it is good. So you should take everything you need, and you should be open to take other techniques, other ideas in order to evolve and progress. You should not be stagnating in one strategy in the market. You will lose, because the market have many moods. Sometimes the market is going good, sometimes the market is going down, sometimes the market is going sideways or trading into a range. So in each way there is a strategy. So be like water, my friend. You said, Curtis said, it's nice if you can day trade it and make money, but it's highly risky. Anything, Curtis, whenever you buy a stock, you are at risk of losing money in any stock. You do day trading, you do swing trading, you do position trading, you do investing. Whenever you put your money into the stock market, you are at risk of losing money. This is a principle and a fact about stock market. So you should put this in your mind. It's not because you buy today and you wait 10 days, you will be better than someone who buys today. No. No, it's not. It depends on the stock itself, where it goes. Is it going your way or is it going against you? There is another. Oh, hello, Vivi Bubble Tea. Thank you very much for coming. He said, is BioND rising again? This IPO keep making a big move. Man, we have bought it and we have sold it. But for me, I bought it yesterday. It means on Thursday. And I got $12 for each share today. And I sold it. I keep it only for one day. I bought it Thursday at the evening and sold it in the morning with $12 a share. And that's it. But it is a very volatile stock. So please, guys, give me just 1 minute. I will leave you. I will show you what BYND has done today. This is 15 minutes. So you see this 15 minutes? Yesterday I bought it around, let's see, 135. I bought it at the I bought it at the end of the day yesterday. Seven. Okay. So I think I bought it at 141. This is for on Thursday. Here, this is where I bought it. It was the end of the day of Thursday. Now I waited until it goes to 157. It was like $16, but I waited until the stock has been going down, and I sold it. I think making 53 or something. I made $12. So I was right today when I sold it, because when I sold it maybe here, when I sold it here, it goes down, it goes up, it goes down, it goes up, then it goes down. So if I left it at the end, I will be losing some money. So I sold it in the morning. So this is just a short trade that I have done, because buy Wendy is very difficult. Okay? So just give me 1 minute. I'm coming back. Hello guys, let's see. So as you have seen, buy YND, which is Beyond Meat, is a very volatile stock. In these years it's rare to see one stock like it. So be careful. Now we bought it whenever I discover it. We have spoken about it here like 3 weeks ago, and I say this stock is for day trading, and because it is so big and so volatile, I put it in my portfolio and I bought it myself, and they say it's very difficult. So either you be at high risk to lose, you can lose a lot of money if you trade this. No, but if you like it, you can do it. Some of my subscribers, they have bought it, some they don't, because they are scared, and they are right to be scared. But fortunately, we bought it 3 weeks ago, and then we got the gap up with $35 for a share for the gap up, and then I sold it, and I sold my stock in the portfolio. But I bought it on Thursday, and I sold it today on Friday morning. Now this is just the way I see things. When I see an opportunity, I take the risk. Because people who are scared, when you see something like a stock doing well, but when it was near you, you don't buy. Because you are scared, and you are right to be scared. Okay? So that's why sometimes you stay with the stock, it is good, but you stay 1 month, 2 months, 3 months, but you don't make that much money, is because this stock is not volatile. That's why the risk, the more the risk, the more you can be rewarded, but it is risky. Vivi Bubble Tea said, is BioMB rising again? This IPO keep making a big move. Yes, but it is it is better if you can day trade it. If you are good at day trading, this stock is good for you. Now, you don't have to buy 100 shares. You can buy 5 shares, 10 shares, 20 shares just to try. Because this stock, when it makes a move, it is so good. I have never seen this year's a stock that can move $20 a day up and down. I have never seen in these years. But there are some stocks that are so volatile because we have a lot of guys that are crazy. When it's going up, they all buy. That's why the stock goes so good. And when they short it, a lot of guys, it means there are a lot of professional traders that are working on this BYND. So be careful. When you buy and when you sell, you should see that this stock is moving too much and too fast. $2, $3, this is in seconds. I have been following the stock. In seconds, in 1 minute, 2, 3 minutes, the stock is moving $10, $15. It's not a game for beginners. If you are a beginner, you don't know how to exit, you don't know how to buy, there is no need to trade this stock. I'm telling you from now. Okay, so let's see. Curtis, thank you very much. But Curtis, I understand you are new here. Go and take my training level 1, which is very, very easy. It shows you what is swing trading, and it shows you what is the strategy that we are following. It tells you a lot of things. And then you can either order my training one by one, or you can go to my subscription. It's as you like. Or you can watch my YouTube videos. It gives you a lot of information, especially the difference between day trading, swing trading, position trading, and investing, and scalping. If you have heard about this word scalping in day trading, all this you find it in my channel. You just put the word and search and watch the videos. If you have questions, just send me an email. Okay? Thank you very much. Oral Peribis said, yes, I am 49 and I love his philosophy. Yes, he has a good philosophy, this Bruce Lee, and he has changed the martial arts and MMA right now. It looks like it is his idea because he showed some techniques like the arm bar in Operation Dragon, I guess, in the movie. He showed techniques that at that time it was not known. It was not known just with the general public. And it is not what he was learning. He was learning Wing Chun. And understand, for you guys, maybe you guys who are looking at martial arts, understand that Wing Chun is a woman who has made this martial arts. It's not a man. That's why Bruce Lee used a lot his hands. And then later, he discovered that he should need to use his legs also. So he got to karate, to taekwondo, and to other sport and other martial arts to get new techniques. Okay? And he used them in his movies. So you see that? Now, Vivi Bubble Tea said, BYND is gonna move higher. I see the price consolidation near the support. Oh no, listen. Listen. Vivi Bubble Tea, I'm telling you, don't try to think a lot about this support line or something. This stock is so volatile. It can go down $20 a day. And support line, resistance line, or other things are just things to be broken. They are not meant to be there always. Okay? So, if you are going to to trade this stock, you should learn, you should have a strategy where you buy, where you sell. Okay. Vivi Bubble Tea said, there is no company like BYND. No, there are. There are companies that are more volatile than it, and I saw it 1 year or 2 years ago. I see a stock from $20, it goes to $300 in a few days. In a few days. It's more than BYND. 300 in a few days. It goes $40, $50, $60 a day. You will never. But unfortunately, I didn't see that stock until it was going down. I didn't see it. Someone has brought it here in our live session, and he told me, what do you think about this stock? When I see it, I didn't see it before. It was so volatile, more than this stock. Now let's go to another question. Curtis said, do you watch the TV while trading or just watch the computer screen? I don't do both. I don't watch the computer screen. I watch the chart, yes. I don't watch TV and I don't follow news. If I watch TV, it means I watch a movie. Because TV is for entertainment. It's not for business. If someone asks you, buy this stock or sell this stock, you should never listen to him. He should give you the reasons. And even if he gives you the reasons, it is his opinion. So you understand? So understand that I don't watch TV. Vivi Bubble, do you know which business buy when? It's beyond me. I think it's selling pet food or something like that, because for me it doesn't matter the company itself, what it does. Does it make a change if it is selling computers or selling meat or selling chicken? Who cares? Okay? I am not going to invest in this company to know what is it, to know the fundamentals, to know the other stuff. So for me, I am just looking at the company's prices. How do they move? If I find a way to enter and make some bucks, that's what I want to do. I don't care about the company. That's why I was always surprised that this company do that. I don't know what they do. Okay? Shaji Abraham says, hello DJ. I am not DJ. What is this DJ? Now when I heard about DJ, I thought it was like music. People who are doing music in weddings, or I don't know. So I am not DJ. My name is Karim. You can write it. Karim is my name. DJ Djellala is my business name. Nazil Anucci is wake up today and he wants to tell me something. Oh, teacher, I didn't know you have a lot of knowledge in martial arts too. We need to have a martial art live lesson on Friday. Just kidding. No, I did karate when I was 15, and when I was like 23 or 24, I did kung fu. I think Wing Chun, the thing that Bruce Lee has done before. But I like Bruce Lee, and I read his books, because for me it's not. I like philosophy. I like to see what's he's thinking. And he was a great man. This is what I know about him. Nazirot, she said the stock ZM has similar price action. Oh! Oh, ZM. I don't know, man. Let me look at this stock. Maybe I will buy it on Monday. Let's see. Oh, that is crazy. 99 to 15 is $6. Oh, no. Let's see the daily. 96 to 15, $9 here. 94, 104, it is $10 here. But listen, yes, it's very good, this stock. 70 to $88. Yes, it looks like the same, but if you can see, for example, the gap up here, 79, 94. Here is only $15, okay? 79, 94. $15. But look here. Look BYND what it does. Here it's from 99, 50, it means 100. It goes to 149. $49. It's not the same. BYND is so big. Here, from here for 2 days, it goes to 186. It means it nearly doubled in 3 days. Doubled from 99.50 to 186. Okay? It means 86% in 2 days. 86%. Now, when we have the gap here down, from 168, it goes to 125. Okay? So, BYND is good. But I keep a notice of this stock. It's very good also. ZM, as you told me, it's very good, but it's not as big as the other one. But I will keep a notice on it. Zoom Video Communications. IPO, it was 62, now it is 100. Now, it is better than Uber and better than the other, but it's very good, okay? Thank you very much, Nasser, because I will take a notice of this one. ZM, it's very good. Thank you very much. Okay. Shaji Abraham said, DJ. Oh, I told you. Hey, Abraham. Abraham, my name is Karim. It's not DJ, man. Look, Abraham, to my name. Djellala is my business name. Is the business name. Okay? So, make the difference. So, this guy is giving me a name right now. Okay? Okay. How important is a screener for you in buying stocks? Okay, let's explain this. In the stock market, we have around 24,000 stocks, ETFs, mutual funds. We have a lot. How can you find stocks then? You should filter them through a stock screener. You filter them, and then you take what you want. Now, for me, I have criteria to use in the stock screener to get these stocks, and then when I get these stocks, I filter again these stocks with other criteria until I find 1 or 2 or 3 stocks that I want to buy. This is why stock screener is good. But also I have a watch list. All the stocks that I have seen before Either I like them, I put them into a portfolio, and I follow them. When there is the momentum to buy them, I buy them. So you understand? So I have two ways to find stocks. Either by putting them into a portfolio, a waiting list, as they say, and I search for stocks using Stock Screener, because the stock market is always getting new stocks. Okay? Always getting new IPOs. So there are some of them that are good. So that's what we use. Curtis said, one of my long stocks is CPRT car auction. I share with you guys. Thank you very much for sharing. And CPRT, let's see, because I will see if I know it or not. I don't know if I have. Oh yeah, we have seen this stock before. I have seen it before. We have searched and we find it. This is 26 December, yes? Yes. This is where we bought our stocks. Here. In this green candlestick, this is where the whole market has gone up. It's not only this stock. So this stock is doing the same as the other companies. Okay? And it is very good stock, yes. Thank you very much for sharing. Vivi Balti say BYND is outperforming this. Oh no, man. Don't speak about the S&P 500, man. Are you crazy? I told you it doubled. You are comparing with S&P 500? No, you can't compare it with the S&P 500. You will never know. You say BYD is outperforming the S&P 500. It's gonna make a cup and head north with market big. Institutions are buying. No, don't say this. These stocks can collapse and they become $0 or $1 in the future. So these stocks are not stable. Okay, they are not stable. Mutual funds, they don't just buy a stock that it is like going up and down like this. They buy something because of the fundamentals. If this company is really making money, the price, it doesn't mean that the stock is going up, the stock is making money. No. Don't be illusioned with this. Okay? Don't be illusioned and don't say the people are buying. The people are buying, you see that later when the stock is $500, $700 and it stays many years going up. This, it means that the people are liking this stock and it's going up. But right now, no. Now it is very volatile. It's like a day trading stock right now. Okay, so be careful of just buying and playing the fool, and the stock is going down and you keep holding it. This stock, if it goes down, as if it go up $49 a day, it can go $49 a day down. Okay, and in few days it can go to $20 or $5 or $1. So be careful. These stocks, you should always be careful and don't buy too much, and look for this stock because it can make you a lot of money, but you can lose a lot of money. Okay, so be careful of this kind of stocks. At least you will understand. Okay, now we have about 40 minutes, 20 minutes to 12. So guys, oh, it's 12 o'clock. Oh, I'm looking at the minutes that we spend here, and I didn't see the time. The time is 12 o'clock. So guys, I should end the session right now because I can't go beyond the 12. It's 2 hours, and because I come late because of the internet, it was making a problem. Now Shaji Abraham said, okay Karim, no more DJ. Do you buy stock before ex-dividend date and take dividend, and you do keep dividend stocks in your portfolio? Oh man, what is this question about dividend? You do dividend stock when you are an investor, because this money is taken from the price. It is not from the company, this money. So Shaj Abraham, please send me an email because it seems to me you have at the beginning of this session I have explained dividend to someone. So if you can go tomorrow to this live session until you find someone asking me about the dividend. So you use the dividend. If you buy before the dividend and they give you the dividend, it's the same. Your money is the same. If the stock is $100, you get 5%. You buy 100 shares, you will get 5% of this money of the stock in your portfolio, in your account after 1 month, for example. But the stock has already gone down by 5%. It means it's your own money. You don't make any other money. You don't sell, yes, but you are not making more money. It is just taken from the price. Because if you see your principal, you will find your principal is the same. The dividend that they send you and the money that you have are the same. And this it needs that I explain in 20 minutes. It's too much. So please, Shaji Abraham, send me an email. Tomorrow I will give you a simple example to understand, or tell me your situation. Tell me what you know about the dividend. For example, you buy a stock that it is $100 and they give 5% dividend and you have $10,000. Tell me what's the future that you are seeing here. I will tell you what is wrong, because if you don't understand very well dividend, you end up not knowing what you are doing in the future. So if you are an investor, I will explain to you more. You can check my training level 16 in my website. Go to my website, you should see Djellala.net. So please take my email and my website, check the training, and tomorrow send me an email and we can discuss the thing. Okay? So it's 12:08. I should finish this thing because at 12 this is the time for the thing. Thank you very much, Nazula Nochi, and thank you all of you guys who were here, who are asking questions. It was a very good and it goes very quick. I didn't know how this 1 hour and 40 minutes go so quick. I didn't know. Now, please, Shaji Abraham, send me. I will change this thing for you, man, right now. So if you find it less, I will send you a discount. Okay. Thank you very much, guys, and see you next time.